Okay, so let's go ahead now and start to take a look at some of the slides now for Chapter 2. And what we're going to do in this chapter now is really start to focus a little bit, give you some more understanding of the accounting profession, but also help you to understand something about the source of standards that we use as we conduct our engagements, primarily focusing obviously on financial statement audit. So taking a look over at the next slide, you can see that we're going to be talking about different types of auditors. And you can see that we can have our external auditors. And that's really how we're focusing in this class. We're really focusing on the external auditors. External auditors, remember, have to be independent. So we're going to go ahead and be independent when we conduct our audit of the financial statement. So we're looking for independence there. External auditors are your CPAs. Okay, they come in from the various firms and do the audits of, in this class, primarily the financial statements. They're the independent ones. Now, management can also have internal auditors. Internal auditors are to maintain their objectivity. But they are not independent of their employer, the client. Now, why do we care about internal auditors? Well, one, just looking at it from a standpoint of a potential career here, we could be an internal auditor. Maybe we work for a few years as external auditor, obtain our CPA, pass the CPA exam, get our license. But then we could be hired by a company to be internal auditors. And internal auditors do get involved with the internal control of the company and really trying to provide information, and internal auditors really should report directly to the board of directors, usually the audit committee. That's our board of directors up there, and I'm trying to do a little org chart here. They're going to report directly to the board of directors and provide information about a lot of different things, but they do get into whether the system of financial internal controls are achieving their objectives. And remember, we talked in Chapter 1 about our internal controls being like the house. We have our house and it's raining outside. The roof, a good solid roof, is going to be our internal controls. So the external auditors can rely, and we'll talk more about this later, about some of the work done in internal auditors. Since they're reporting to the board of directors about the internal control, we could look at their function and really incorporate some of their work into our work. But again, the independent auditor directs the audit of the financial statements and gives that opinion. Now we talk about government auditors, and government auditors have a lot of different functions. I worked for, as I mentioned in the introductory video, for the Government Accountability Office. So GAO is an example of government auditors. The GAO, I'm trying to write in there. Okay, there's my G for GAO, government auditors. You can have a nice career working for the government. I'm obviously not objective in my opinion there, but you could be a government auditor. And IRS, okay, is another example of a government auditor. You'll be everybody's friend if you work for the IRS, of course, but you learn a lot about the tax law, etc. And often with government auditors, we're looking at compliance aspects. Okay, compliance tends to be a focus a lot of our government audits. But it's also the GAO. We were the external auditors to the financial statements of different. They still are. I was on those audits. The GAO still does that work, and they're the external auditors for various federal agencies. So GAO would literally audit IRS in that example, and looking at their financial statements, but also looking at some compliance issues. Forensic auditors really get in and are looking at things like white collar crime, that sort of thing. So even though I'm still putting in the context of the government, the FBI is an example of an entity that might use forensic auditors, right? Follow the money trail with white collar crime, that sort of thing. And the FBI actively seeks accountants as individuals that they would bring in to help with forensic auditing and looking to see, follow the money trail, see if there's been impropriety. Or it doesn't have to be that. It could be, looking at an estate and looking to see where the funds are flowing and who's going to be entitled to certain inheritance, etc. All of this could fall under the idea of forensic auditing. So different types of things. We're going to focus, obviously, up here quite a bit, the external auditors auditing the financial statements, but we also are going to understand how the internal auditors, who are again reporting to the board of directors of the company, are going to be valuable, the work that they do to the external auditors as well. So you come over and you take a look at the different types of audit services up here, and of course I'm not sure why they left out financial statement audit, okay, so I'm just put financial statement audit as well is an audit, but you could see that we could audit different types of aspects of this company, including internal control, okay, and we'll talk about that when we get to the end of the discussion after Chapter 18. I think it's technically Chapter 7, I want to say, but I went ahead and I moved that back so that we've talked about the audit of the financial statements, and then we talk about the audit of internal control, which is required to happen for public companies, okay? We have to do that when we're auditing a public company. It's required that we go ahead and audit the internal control, and we'll see that a little bit later and talk some more about that as we go along. But we have these different audits. An audit is an attest. At the end of the day, the auditor testifies as to whether or not the financial statements are fairly stated. But not all attests are audits. And you can see, for example, the quality of inventory or something. If a loan is going to be given by a bank based on the inventory, there would be a type of a test where you would go in and you're really going beyond just the results of economic transactions there and talking about something like the quality of inventory. And then you can see that auditing is an assurance as the auditor goes ahead and gives assurances about the financial statements, but auditors can give assurance about things other than financial statements. For example, we give assurance as to the working of a web-based system and give some assurances on that. So our audits are a test and they are assurances, but then we have a test and assurance services that are obviously, as you can see here, not necessarily considered audits. Again, this class, financial statement auditing, internal control auditing is going to be our major focus, but you could get into some of these others in the profession. For example, the compliance audits that I talked about that often get involved with government auditors. Non-audit services down here, okay, for example, your tax services are considered non-audit services. So as you go through and you look at that, you're going to have your non-audit services being your tax services, etc. And you can see that was there on that previous slide. I don't want to click back because I'll lose what I've already done on the other slide. You won't be able to see it. And so I don't want to go back, but you can see down there, just looking back at that last slide, I'm not changing it on the screen here, but your non-audit services, tax being a classic example of non-audit services. Now this slide starts to show to us the outlay of the profession, okay? And so you have your different firms, your big four firms, and I'm sure you've heard of these: PricewaterhouseCoopers, Ernst & Young, Deloitte, KPMG. Okay, there used to be 8 of them, and we've come down now to 4 of these firms, and these are multinational firms. I've had a lot of students over the years in my CPA classes that have worked overseas for any one of these. In fact, when I was in, I believe it was Bahrain, I met some auditors from one of these firms that are working internationally for these. So these are all over the world, okay? Then you have your mid-tier firms like Grant Thornton, who audit the Oakland A's out here in the Bay Area, in the East Bay. My team, the Oakland A's, obviously they're a big mid-tier firm. A firm that isn't mentioned here that's a mid-tier firm, Moss Adams. I have a lot of students from there, so and some good friends who work at Moss Adams. So you have these different mid-term firms, then you have your regional firms and your local firms. Okay, the way the big four firms are typically organized, is going to be, you're going to have your Attest services, your audit services that we saw there, and then they're probably going to have assurance services where you get to things outside of the financial statements, consulting, etc. And then you'll have your tax services. So that's usually how they organize. And as you move across to the midterm, to the local firms, you're going to have a lot more crossover in probably doing work in any one of those areas as you join one of those firms. Lot of opportunity out there, obviously, in public accounting. And then again, we're not listing here government agencies like I mentioned. I have a lot of students who've done well working for the city and county of San Francisco, and they get into various audit functions. So a lot of opportunities, state, local, federal government as well. And then we're not even mentioning corporations here. I've had students over the year who work for Chevron, for example, in their internal audit department. Listing a lot of Bay Area entities here because that's where I am up here in Northern California, here near College of San Mateo, just on the other side of the San Mateo Bridge near Hayward. So anyway, a lot of different opportunities here in public accounting, obviously. Okay, taking a look at the different duties. Okay, partner. Okay, this is after you've worked in the industry probably about 15 years, you eventually will ascend to partner. Okay, and the partner is really the one that is ultimately responsible for signing off on those opinions of the financial statements. So they are really the buck stops here, so to speak, with the partner. Now, before you reach partner, you'll be manager. And you're going to be doing much more review of work that is being done by the audit team. Your audit team being your senior in charge. Your senior in charge is really where you begin to supervise and review the work of the associate staff, and that's obviously the entry level where you come in and work as an associate staff. And there was a question in the homework I noticed, I think it was quiz question number 8, okay, so I'm going to just put Q8 right here so that you remember when you get to that question. They say, when do you actually begin to start to supervise staff? It's when you get to that senior in charge level. But ultimately, the person that's responsible for making really many of the decisions that we talk about in this class is partner level. So you're going to be learning the thought process of the partner. And when you think about some of these things, I don't want you to think of yourself down here as an associate, even though you may be fairly new to the industry. I want you to think of yourself up here at the partner level, because many of the decisions that we talk about, the assessments of risk, etc., are made at partner level. Now, we talk about a time of challenge, and we talk about 1990 to 2000, and look, this is a long time with 2000, but then we've got issues coming up in 2010 that we're going to talk about, so that's starting to get, 2010 is starting to get into, 20 years of trouble here. And so I look at this and I'm like, well, is it a certain period of time, or are things just challenging for the profession? Okay, but what we're going to see is there have been, and do this explosion. Let's see how these slides are now exploding out, and we have this explosion of different scandals. Okay, the big two that people talk about quite a bit being the Enron, in which Enron was doing some questionable things with their revenues, and this led to some problems for a firm that used to be one of the, well, I guess it was big when there were 8 of them, and Arthur Andersen was one of the big 8 firms that essentially was dragged down by the client Enron, and with some of the scandals there, and I'm sure you've heard about that. But that led really to the Sarbanes-Oxley Act in 2002, and then you had WorldCom also around that time that also helped bring in some of the Sarbanes-Oxley legislations that we'll talk about a little bit later. And then you also had some problems with the financial crisis of 2010 that also led to Dodd-Frank legislation. So let's just look at some of these legislation, the 2002 Sarbanes-Oxley. Sarbanes was the senator, Democrat. Oxley was the House member, Republican, and back when Congress used to get together on these things, they passed the Sarbanes-Oxley Act, which created the Public Company Accounting Oversight Board. So PCAOB is going, and we'll talk about this more, PCAOB in a couple of minutes, but PCAOB comes out of the Sarbanes-Oxley Act. And then you notice, it's not that, they pass the Sarbanes-Oxley Act and they say, so nothing like this ever happens again. And then just a few years later, 8 years later, whatever, they have to pass the Dodd-Frank. And Dodd-Frank were both Democrats, but they passed the Dodd-Frank Act that we've reformed some problems with Wall Street that brought in the financial crisis. So I don't know. I think these things tend to come as, it looks like every 10 years or so, something new is coming up and some legislation is coming in. But these are the Sarbanes-Oxley really being the main one that affected the auditing profession. Okay, so again, when we give our assurances, and we said this in chapter 1, we give reasonable assurance. We do not give absolute assurance. Okay, that is impossible, and we talked about how sampling affects that, how just the fact that we are not infallible, how the potential for fraud and the concealment aspects of fraud make it impossible for us to give absolute assurance, so we have to only give reasonable assurance. No such thing as absolute assurance, because we just do not know everything that could possibly affect us. So for that reason, we only give reasonable assurance on the financial statements. Okay, now we mentioned in chapter 1, when we did our high overview of the process, we talked about the board of directors, and then part of that board of directors is the audit committee. Now sometimes you'll see the board of directors being called those. Okay, that's those, a little hard to write with this thing, those charged with governance. Okay, I'm just going to abbreviate that, those charged with governance, okay? And those charged with governance is our board of directors, and then we have different committees, and the committee that we are most interested in as the auditors is the audit committee. Okay, so audit committee really oversees the audit, okay? And they're going to make sure, okay, that says oversees the audit, and they're going to make sure that we are getting the information we need, that management is being cooperative. They are really the ones that engage the auditors to begin with, the audit committee, that's their responsibility. Okay, and all of this is corporate governance. And we're going to see that if there's some issue in the audit where we're asking for information from management and we're not receiving the information we need, or there's some correction of the financial statements that we're looking for, we're going to literally hope that this corporate governance structure kicks in, and the audit committee will come in and make sure that management is providing us with information that we need, etc. Now look, we're not running to the board of directors audit committee every time management looks at us a little bit sideways or something, but certainly if there's a key aspect of the audit that we aren't necessarily getting the full cooperation from management on, the standards typically look to us to go ahead and turn to the audit committee to help us to obtain that information, whatever it is. So audit committee really oversees that audit, and the audit committee is part of our board of directors. Okay. Now, going over to the next slide, we can see that there are various organizations that affect public accountants. For example, public accounting, you don't have to be a public accountant, but the public accounting profession, the Security Exchange Commission, okay, the SEC, those were promulgated, the SEC was created by the Securities Acts of 1933 and 1934. And in there, they established that the profession would set accounting standards, and they had a couple of predecessors, but the current standard setter in the United States is the FASB, the Financial Accounting Standards Board. You learned a lot about their standards in your intermediate accounting. And then for our international standards, we've mentioned, actually they're not showing us the international, here we go, I don't know why they put them on this side, but the International Accounting Standards Board, the ISB, and ISB issues IFRS, and you learned some about that in the in your intermediate accounting class. And when we're talking about the financial section of the CPA exam, we're really looking at FASB, and then to a smaller extent, we're looking at the International Accounting Standards Board as well. Now, when we get into our auditing, and for this class where we're going to be particularly interested, is we're going to be interested in the American Institute of Certified Public Accountants, okay, and I'm not trying to cross them out, I'm trying to highlight them, okay, the American Institute of Certified Public Accountants, and we're going to see that they have an Auditing Standards Board. I don't know if we're going to mention that here, but they have an Auditing Standards Board, which is sort of like the FASB, but they issue standards for us to follow when we are going ahead and auditing a non-public company. So when we look at the AICPA, AICPA is the one that is responsible for issuing standards when we're auditing non-public companies. I'm going to put non-public over here. Okay, when we audit non-public companies, then we're going to follow the American Institute of Certified Public Accountant standards. When we are auditing a public company, okay, then we're going to follow the Public Company Accounting Oversight Board requirements, PCAOB, as we mentioned. That was created by the Sarbanes-Oxley Act. And then we also have international standards as well. So when you get to your auditing exam, if you're thinking about the CPA exam, auditing exam covers standards issued by the AICPA's Auditing Standards Board, the PCAOB, and the international standards. Now, quite a bit of similarity between the AICPA standards for non-public companies, PCAOB, and international standards. So before you panic and say, wow, I'm going to have to learn 3 different types of standards here for this class and for the auditing exam, if you're going to take that for the CPA exam, a lot of overlap between these, and so it's really like learning 1 set of standards instead of 3. And so we'll start to take a look at the next slide here where you can see the relationship here. Okay, so when we're dealing with, as you saw on the last slide, when we're dealing with our public companies, we're going to follow PCAOB. Non-public company, we follow the AICPA. No, they're not showing them here. The Auditing Standards Board is an entity that is housed inside of the AICPA, and they set our auditing standards for non-public companies, and then we have our international standards. Now, you see over here this arrow pointing back and forth to the AICPA Auditing Standards Board for non-public companies and the international standards. And a few years ago there was a convergence project which basically got these standards to be very similar. Okay, so when you see the designation for your auditing standards of AUC, that means the clarified standards. And in some of these slides, I noticed the textbook didn't always include the C designation. They should always put that C designation. That was added a few years back when essentially they went through and did work to make the U.S. auditing standards promulgated by the Auditing Standards Board, the AICPA, in line very closely to the international standards. Now, when we talk about PCAOB standards, and I don't know, there's about 20 of these, about 20. Meanwhile, there's hundreds of these Auditing Standard Board standards. And you're looking at that and you're saying, well, geez, I want to audit a public company then because there's only 20 standards instead of hundreds. No, what happens is the PCAOB essentially has reached out and pulled in. Okay, that's what that arrow is trying to say, and I'm just going to draw another arrow there for no reason. The PCAOB has pulled in the non-public company standards and essentially said something like this, guys. Do everything that you would do if you were auditing a non-public company, but then we're going to add some additional things on if you're auditing a public company. So these additional, like I say, about 20 standards have requirements that really go beyond those of the requirements for non-public companies. And the classic example here is internal control. Okay, there's an expectation that we will actually audit the internal control, that says internal control, of a public company and literally render a report as to our belief that the internal controls are providing reliability in financial reporting. Okay, and so we're going to see that in a later chapter, but that is an example where the PCAOB has added on to the requirements for non-public companies. So you can see that as our different standards. Now, when you take a look at the standards, and that is something that I think you should look at in your textbook. I'll show you that when I come back on the screen, that in the back of your book, they have issued they have printed the various standards. They don't have the entire set of standards, but they've given you a listing of the standards that are there towards the back of your book. And so you can literally sit back there and see how they have organized the standards for both the PCAOB and the AICPA Auditing Standards Board standards. And I think that's a real useful thing for you. It's all the way to the back of your book, the very back, the last few pages, just after the abbreviations, or just before the abbreviations, towards the back of your book. And what's interesting about this is it gives you a sense as to the different parts of the audit. Remember, we talked about different parts of the audit in our last chapter, and it tells you what standards apply to those different parts. So if we're talking about those reports, then we're in AUC section 700, and they start to talk about different types of the information that is there. Now when we say AUC, they are codifying those by the different parts of the audit. So that AU stands for the codification, where they organize the standards by topic. So even though a standard may have been issued years ago and it relates to say the reporting, it's going to be down in the reporting area, the AU 700. Meanwhile, if we're dealing with something that is dealing with, say, general principles on an audit, even though that may have been issued more recently, it would be under the 200s. So our Auditing Standards Board standards are grouped by area of the audit. They are codified by different subject matter. The PCAOB standards, and just looking at the list here, I said about 20, so there's 18 of them. They are listed in order of when they were issued. So the first one was issued before the second one was issued before the third one, and so on. Okay, and so those are listed chronologically versus a situation where the Auditing Standards Board standards, the AUCs, are issued by topic, okay, with the 700s, for example, being in the reporting section. Okay, so that's the layout of the standards. We're going to be obviously talking quite a bit about the auditing standards, the AU, the statements on auditing standards, and those are promulgated by the Auditing Standards Board, the SASs. Okay, we'll talk quite a bit about those, and then I said about 20, I guess it can be more precise. There's 18 of those, and that is going to be our auditing standards. They just put AS for those. And again, the international standards and the Auditing Standards Board, because of the clarification project, are very much in line with each other. So you'll see that AUC designation. Even though you may not see it on the slides, your textbook is much more consistent in making sure they're putting AUC there. Okay, so we have our 10 generally accepted auditing standards, and a lot of similarity between what the ASB does and the PCAOB does here. So this not only, even though we're going to talk about in context of the PCAOB requirements. Auditing Standards Board requirements are very similar. Okay, so we have three categories of standards. We have our general standards, our fieldwork standards, and our reporting standards. By the way, there are 10 of them, so we're going to have 3 in the first 2 categories and 4 in our last category for our total of 10. Okay, now when we're talking up here at 10 standards, this is like the 10 commandments, okay, if you will, and that what high level things that we need to do in the profession. Then what? Then we have standards that back all this up. We have our statements on auditing standards. We have our auditing standards by the PCAOB that back up these broad, if you will, 10 commandments. And so you can think of all the different standards and guidance that is provided as the Bible. And this is being at a higher level, our 10 commandments, our 10 standards. General standards, fieldwork standards, reporting standards. We come over and we talk about there being adequate technical training. And you're engaging in that right now, whether you know it or not, by taking an auditing class. You are obtaining training. You are following the first general standard. There are 3 of them. Independence. Okay, we have to be independent when we're going to do an audit of the financial statements. Therefore, we cannot have direct ownership in our client. That would violate the independence standard. We cannot audit where we have a family relationship. We can't audit the financial statements if our spouse is the CFO. Now, if our spouse is the dishwasher at a restaurant, then we might be okay to go ahead and audit the financial statements of that restaurant. But if the spouse is the CFO of the restaurant, no, we cannot audit those financial statements. So we need to maintain our independence. Do professional care. Okay, this means that you are going to make sure that you are performing your work as a professional. So we talked about when you accept the client, that you have to have that you have to be able to acquire the knowledge to successfully accept that client. And remember, we said that you shouldn't accept the client if you don't think that you can successfully complete that audit. That is part of our do professional care, our 3 standards falling under the general standards. And I'm giving you a little mnemonic here for the 3 standards, which is TIP, right? So we have to have training, we have to have independence, and we have to have due professional care. Okay, so that shows us our 3 general standards. Now, we also said there are 3 fieldwork standards, and of course we have to adequately plan the audit and supervise the audit. And remember, I said that you need to think of yourself as partner, so the partner supervises everybody else. And I'm going to give you another mnemonic here so we can put a P up there. Then what? Then we're going to look at those internal controls. Remember that we said that the auditor is going to see to what extent the internal controls are going to prevent or detect misstatement from raining down on our financial statements. And if we have a good solid roof, internal control there that is preventing the rain, the misstatements from hitting the financials, that is going to allow us to be much more efficient in how we direct our work. And we're going to be directing our work more towards those areas where the internal controls are not as reliable as to where they are more reliable. We will not have to give as much attention to those areas. We can't ignore anything, but we can direct the amount of attention that we're giving based on this understanding of internal control. But to make that decision, we obviously have to look at the internal control and make sure that we get a good understanding of that. So that's the I in our field work, as we're going through our field work. And then we're going to have to get evidence. And we talked about evidence in the last chapter, and evidence about what? About the financial statement assertions. So you can see we got TIP for our general standards, and we've got PI here for our field work standards. Okay? Going over to the next, then we have our reporting standards. Okay, and when we have our reporting standards, we are going to have to talk about whether or not the company complied with generally accepted accounting standards. So we're talking about what? We're talking about accounting here, right? Okay, we have to follow the proper accounting standards, management does, and our report will call out, and there will be an explicit statement as to whether or not we think the financial statements were fairly stated in accordance with the generally accepted accounting principles, whether it be IFRS, the Financial Accounting Standards Board standards, etc., whatever those are. Could be the Governmental Accounting Standards Board if we were auditing a state and local government's financial statements. All of these are GAAP that need to be followed, and so the A there is going to be something that we'll use in a mnemonic. I'm going to go ahead and put the always up here. Okay, always is going to be the A here. Okay, then what? Consistency. Okay, consistency. And consistency means that the company is pretty much using the same standards from period to period. Now this is implicit. Okay, this is implicit. We don't call out, we don't specifically say anything about consistency unless there's been a change. If there's been a change in accounting principles, and we're going to learn much more about all of this in Chapter 18, but if there's been a change in accounting principle, then we are required to call out that change. Now, we still give an unqualified, unmodified opinion. Still giving an unmodified opinion, but we'll add some additional language to that report that will call out that change in accounting principle. If there's been no change, then it is implied, it is implicit that there has been no change, and so we do not call out consistency explicitly. We only mention change if there's actually been a change, and when you read through the opinion, we don't mention consistency if there has not been a change. So it's implied that there hasn't been a change when you read that report. Disclosure is, and that's going to be a C, okay, or it's actually going to be the whole word in our little statement I'm going to have here. Then we're going to have disclosure, okay? And disclosure, we're going to use the word do here, and disclosure is another item that is implicit. Okay, we do not call out that all the disclosures have been provided. We don't call that out. We only call out disclosure if there's been a problem with disclosure. If we have qualified our opinion because the company has not followed all the disclosure requirements, then we will go ahead and mention disclosure. But if all the disclosure there is implicit that there has been adequate disclosure, and we do not have to call that out explicitly. Opinion, yes, that's going to be explicit. We're going to explicitly say, in our opinion, the financial statements are fairly stated, or we are going to have to say that we do not believe that the financial statements are fairly stated, or we're going to have to say we cannot give an opinion that the financial statements are fairly stated. Whatever it is, there has to be a conclusion, okay? And so that's going to be okay in our little mnemonic. And so what are we going to have? We're going to always consistently do okay. Okay, always consistently do okay is a good way to help you remember the standards for our reporting, and then you can see here which ones are explicit versus implicit. Again, all of this much more in Chapter 18 on the reporting standards, but I did see some questions, and I'll call those out to you when we go through our homework here in a little while. I did see some cases where they went ahead and expected us to understand whether they were implicit, explicit, etc. So always consistently do okay, and that will help you remember your reporting standards. Okay, so those are reporting standards, and then you see that we have listed all 10 of the standards out here in more detail for you, so you can take a look at some of the literature that's there around those. But notice that we have to state, the report shall state, okay, whether or not the financial statements are fairly stated, so the report shall state that, okay, so that's an explicit statement. The report shall contain the expression of opinion, okay, and then we say that we will call out situation where something has not been consistently applied, so we only call that out when there's been a change in accounting principles. And again, that doesn't have to result in a expression of a qualified or adverse opinion. It just simply means there's been a change, and if there is, we have to call that out. And then if there is what? If there is not the appropriate disclosure, then we will have to call that out. It's otherwise assumed implicitly that there is the appropriate disclosure. And you can see the other standards up there in our fieldwork standards and our general standards. Okay, so this is probably a nice slide. The yellow here is going to be those that are implicit. The green, the other way around. The yellow showing those that are explicitly called out in the report. The green showing the implicit. Okay. All right. So let's go ahead then and we look at our generally accepted auditing standards, and we have what? We have our SASs, Statements on Auditing Standards, okay, and we have to follow those, okay, and we've said that PCAOB has gone ahead and adopted many of the SASs. So when we look at our PCAOB, they've adopted the SASs. However, they have continued to add on additional requirements, which are our auditing standards. They call those auditing standards. So remember, we had that slide where we showed, yeah, you got PCAOB over here for our public companies, but then to a large extent, they pull in the SASs, and so for the most part, you're going to do similar requirements for both the public and non-public, and then the PCAOB requirements add on. For our purposes in this class, one of the major ones going to be the requirement that we literally give an opinion on internal control of a company. We have to do that for a public company. We do not have to do that for a non-public company, and that's why PCAOB has added on additional standards called these auditing standards. When we're talking about our SASs, those are for our non-public companies promulgated by the AICPA. But again, auditing public company essentially follow PCAOB and follow SAS, and then when you're auditing a non-public company, then of course you just have to follow the SASs here. And again, SASs and the international standards very, very similar after the clarification project. Okay, so let's go ahead and look at our statements on auditing standards. And when they issue those statements on auditing standards, they have a couple of different ways that they have listed those. Okay, they list them in terms of their statement on auditing standard, and they'll list them by what particular chronologically what number they came out. So SAS 1 was the first one, and as I said, there's hundreds. When you start to get into the hundreds, those are the later ones. But then they go ahead and they codify them by different parts of the audit. Remember, I mentioned the reporting standards are going to be in the 700 section. So if you had something that was issued years ago that dealt with the reporting standards, it's down in 700. Something that was issued more recently, even though that SAS has a later number, for the codification purposes, it might be up in the 200s if it dealt with our general requirements on our audits. Okay, so, and they put AU here. It's technically, it should be AUC. Okay, and again, I want you to look at the back of the book, and I think when you look at that, and I'm going to show you that when we come back on the screen, you're going to see that the requirements for the way these are listed, I should say, we're going to see that we have the planning are all up in one section, the reporting are down, standards for field work are in different areas, and they list them by the different parts of the audit. Now, we talked about the 10 standards. That's a high level, but the detail are contained in these SASs. So SAS is like the Bible, the 10 standards are like the 10 commandments. Okay, and so we'll see that, and I'll show you that towards the back when we come back, in the back of the book when we come back on the screen, and you'll see how they've listed all those there. Okay, when we look at those, oh, here we go. This is a nice right here on the screen. I'll still show you those in the back of the book, but I keep talking about the reporting standards being down in AU 700 for reporting. General principles are up here in 200. Okay, and then our risk assessment procedures, that's where we're really going to be getting in. And remember, we said we had to understand the internal control. Okay, so when we're doing that part of the work, that's in the risk assessment procedures. When we talk about getting evidence, that's when we're actually doing our audit test using the work of others. Okay, this is a nice slide. When we talked about using the work of the internal auditors, that would be covered under AUC section 600, or if we need a specialist, we will conclude the audit. Remember I said last time we have to talk to the client attorney in a audit. We'll understand that in some of our later chapters. That would be work to conclude the audit. So this gives us actually a nice list, and here's a really good example. We talked about audit sampling last time, which is SAS 39, and as I've said, we're into the hundreds now, right? But if you look, SAS 39 is actually down here in the area of dealing with our risk assessment procedures, as we use sampling to look at our internal controls and see that they have been applied on a consistent basis. When we look at our operating effectiveness, we'll use sampling for that. So even though SAS 39 has been out for some time now, they have hundreds of them. Notice they're down here in the 300 section, and there's some standards that maybe were issued even before SAS 39 that may be down here if it applies to using work of others. Okay, and I'm going to show you a homework question where they're going to expect you to understand that sort of a listing. Okay, now these are we had the 10 generally accepted standards. Okay, in our 3 categories: our general, our planning, and I should say our field work, and then our reporting. But you can see then that there are hundreds of standards that support those 10 high-level standards. Okay, now and then of course we have the PCAOB that was from that previous slide. I didn't mention PCAOB on that previous slide, but we also have PCAOB standards that we follow as well when we're auditing public companies, and they add on to the SASs that are listed by subject matter in the codification under the AUC designations. Now, ethics, okay, our moral responsibilities, our moral duties. Very important. This is covered outside of the standards, but the AICPA has a code of professional conduct that we are to follow, and then what happens is the states typically mirror their AICPA's Code of Professional Conduct to actually put that into legislation. So if you look at, for example, the state of California, you have the Accountancy Act, and the Accountancy Act lays out what some of the ethical requirements are for CPAs in the state of California, and they have also regulations there that if you don't follow those, they will take your license from you. Okay, so when we're talking about something like making sure that we have the professional competence to complete an audit, that's one of those general standards, but then it's also in the Code of Conduct, and then through legislation, it's also in the Accountancy Act, so that if you bid on a client and you lowball the bid on that client just to get that client, it's not okay to get halfway through that engagement and then say, oh, sorry, I can't complete this because I bid too low and I don't have the ability to obtain the professional competence to complete that. If you ever read the state of California's quarterly report and you look in the back of that quarterly report, you will see disciplinary actions for individuals who did just such a thing. They engaged in audit where they did not have the technical competence to reasonably complete that audit, and there are sanctions associated with that, and it could range from taking your license to suspending it. You're going to have to pay fines associated with that. You're going to have to pay for the investigation. It gets real hairy. So that Code of Professional Conduct, we don't get too much into this class, but it is out there. And again, it is put into legislation by the 50 states. It's the AICPA's Code of Conduct, but then the 50 states adopt much of that, and they use that to regulate CPAs through the regulations, which are issued in the state of California by the State Board of Accountancy. By the way, the State Board of Accountancy is also the one that will be determining whether or not you are eligible to sit for the exam, CPA exam. And again, if there are questions about the requirements there, I'd be happy. I did get one email on that, and I'm happy to help folks figure that out if you do need help with that. But that is the Code of Professional Conduct. Okay, and you can see that on the next slide where we talk about issues of ethics, independence. Again, I think I've said enough about that Code of Professional Conduct and how it really helps us to understand how we are supposed to act as professionals when it comes to our day-to-day dealings with our clients, etc. Okay, that is it for Chapter 2 at this point for our slides. I'm going to ask you to now click on the next video where I'm going to talk a little bit about your homework with you. Okay? Okay, so I'll see you in a couple minutes. Just click on that next video you see that comes after the slides, and we're going to talk about the homework.